So you bought some stocks and you have no idea what to do right now, or you just ran out of cash and waiting for your next paycheck. Sounds familiar? I call this downtime. So much for a fancy name, eh? Hey guys, what is up? Ziet here. Thanks for tuning in. If you are watching this video, you are probably in your downtime doing your research and absorbing more knowledge, and I gotta give it to you, that's pretty commendable. And that is exactly why I made this video, to introduce you 4 ideas to help make your downtime more productive, rather than just jumping from one YouTube video to another and to another. I appreciate if you can help me smack the like button down below. It goes a long way for the YouTube algorithm. Thank you very much for that. And without further ado, let's jump right into today's content. Firstly, before you go out and look for the next best stock or the next best idea to research on, you need to make a very fundamental decision for your portfolio, which is to evaluate your portfolio composition. Ask yourself, do you really need 10 or 15 or 20 stocks in your portfolio? Or do you really need to own a piece of every trending stocks that everyone's talking about, such as NEO, Palantir, or whatever that is? And that's really something that I ask myself every time, because just like every other human, I'm sure you go through the same thing. The entire YouTube community have been raving about all of these trending stocks and saying how good they are, and I would be lying if I said that I wasn't tempted at all to want to own a piece of this, to own a piece of that, this, that. Diversification, right? That's what they call it. Look, I'm not against diversification, but you need to be rational in strategizing your portfolio and finding the right risk to reward ratio that best fits you. Owning too many stocks from too many industries just means that you are prioritizing quantity over quality, and that would dilute your commitment. Warren Buffett once said, diversification may preserve wealth, but concentration builds wealth. Some would argue that a concentrated portfolio brings more risk, but my counter argument is, how do you define risk? Does risk means having a chance of losing your money, or does risk means having a chance of not growing your money? I for one myself prefer a more concentrated portfolio so that I can focus my energy into 3 to 5 stocks, and that to me is lower risk because I am able to track them more efficiently and keep them under my fingertips. And that's precisely why you can see my portfolio here is concentrated on Tesla and just a few other stocks that I am highly convicted to, and that makes it easier for me to average down if the price dips, and inevitably that's what you have to do because no one can time the market, right? Moving on, the second thing that you can do during your downtime is to understand your stocks further. Let me explain why. If you own NEO, for example, you gotta be able to explain to a 5-year-old why you think that it is a great company. And trust me, I've asked a lot of people why they invest in NEO, and most of them seem to say that NEO is the Tesla of China, has great autonomous driving feature, produces great looking cars, and has a great battery swapping business model, and blah 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 blah. And that got me worried because all of those actually sounds cool on paper, but there's actually not much proof of those concepts yet. And even if there are, to what extent are they? If you say that NEO is the Tesla of China, do you really understand about the lithium-ion battery technology? Are they really advertising their vehicle range based on the industry test standards? Do you really understand about the battery swap business model? Is it really profitable, or does it even make any sense in mainland of China? Do you really understand about its supply chain, where it sources its battery from? Or what's the price? What's the supply forecast, and will it be able to meet its demand if they even have any? Do you really understand their manufacturing verticals? Who do they outsource their works to? How credible are they? Are they competent enough to do those jobs? See, my point is, I don't want you to be sold a dream, because that is what almost every outspoken CEO or company is trying to do. You need to understand the ulterior motive of every public listed company is to raise capital, and in order for them to do that better, they need higher share prices. I'm not trying to discount the fact that there are companies out there that raise capital to provide us with better technology and better healthcare and whatnot, and that will make our lives better. But instead of taking all of those at face value, why not take some time to dive deeper when you are in your downtime? Identify the real deal from the huge financial market, and trust me, that is easier said than done. Remember, coming out with a concept is easy, but making it work on a commercial scale or even making it profitable is a whole new challenge by itself. And rightfully so, a lot of companies fail to deliver what they promise. Feel free to Google up Nikola or Theranos and you will know what I mean. If you really have no idea where to start, why not start with forums such as Reddit? Not Wall Street Bets though, but r/investing. Read whatever everyone is talking about and take note of their discussions or arguments, and that should be a great starting point for you. Thirdly, you can also spend some time on the company's financials such as their quarterly earnings. Pull out your calendar and mark down their upcoming quarterly earnings date. By the way, the annual reports in the US market are called 10K filing, but I prefer the quarterly earnings which they call the 10Q filing. If you have no idea what that is, basically every public listed company is required to disclose their quarterly or their 3-monthly financial status and performance once every 3 months, so 4 quarters over the course of the entire financial year. To make things simpler, you can also visit third-party websites like Yahoo Finance, Wall Street Journal, Financial Visualization or Finviz, or Google Finance to look at their financial summaries. All of the numbers from those websites are pretty reliable because they derive it from the SEC's API data, and if you have no idea what that means, it's basically technology. But if you are bad with reading financials or just generally bad with numbers, then that's totally fine, because that means you will be more interested in reading materials. And for that, you can look for websites like Seeking Alpha, Morningstar, and The Motley Fool. They make financial contents more interesting and more digestible. But don't just take all of those infos at face value, alright? Always verify them across other sources. So if you are still watching up until this point, you must be wondering,
Okay, Ziet, I know I have to read articles, videos, financials. I know how to do all of those. But Ziet, what can I do more to gain better advantage?
and if you are that eager to up your investing game, may I recommend you technical analysis. And that itself is an art or skill that I'm sure you will enjoy learning, or at least I did. Learn to read price actions, support and resistance, chart patterns, chart indicators such as RSI, Fibonacci, Bollinger Bands, and whatnot. You might think,
So troublesome, I don't even know what they mean.
but trust me, just trust me on this one. All of those, once you learn them, you will gain a new perspective on the stock market. Anyways, I like to learn from YouTube videos primarily, such as Rainer Teo or Trading 212's YouTube channel, and they make really good technical analysis content. So go check it out, I'm sure you won't be disappointed, and I'll also link them in the description box below. Those are the things that will keep you busy, and if you put enough effort to understand them, you are still not guaranteed to make money, but what it can do is to help increase your win to lose trade ratio. Peter Lynch said the exact same thing. In this business, if you are good, you are right 6 times out of 10. You are never going to be right 9 times out of 10. And essentially that is what everyone is trying to achieve. You can never be perfect, and you will never be. So don't stop learning new knowledge, because you never know, one day it will become very handy for you. Don't have the mindset of avoiding technical analysis just because you are a buy and hold investor. The market is a freaking universe by itself, so absorb everything and be like water.
I said, empty your mind. Be formless, shapeless, like water.
Alright, so those are the 4 things or ideas that I hope can make your downtime more productive, and at the same time stay focused and not get distracted by all of those market noise. Trust me, you will always be distracted by all of those market noise, such as new meme stocks, new hype stocks, new partnership, new technology, or new ventures. They will come eventually, because that is how news media make money, by getting you to click and consume their content. So always think like a business owner, and you will mature your thinking in no time. That is part and parcel of investing or running a business. Being able to cut out the noise and focus on the real deal is a skill, an art that everyone is trying to master, but yet many fail to do so. If you are constantly distracted by the day-to-day market noise, even though you have no bullets left, then you should consider allocating a very tiny portion in your portfolio for those occasions. And there's nothing wrong to that. Just don't mix up gambling and investing, so that you can stay on the right course. As much as you are trying to grow your wealth, you should be really enjoying the process, and that makes the journey more enjoyable and sustainable for the long run. Just like diet, you need to be able to enjoy those diets to make it sustainable, else it is a wasted effort. Okay, that is pretty much it for today. Huge disclaimer, I am not a licensed financial advisor, and you shouldn't be taking my words as an investment advice, because if you take an investment advice from a guy on YouTube holding a fork microphone, you may need help. Okay, just kidding. Whatever you do, invest safely, alright? And with all of that said, stay safe, stay invested, and as usual, I will see you in the next one.